All right, good morning, everyone. It is 9:15 in the morning of August 24th, 2022, and this is my pre-market strategy session. Here we go. The title of the video is Front Run the Federal Reserve, which is really the name of the game. If the Federal Reserve is raising interest rates, it is time to get in front by shorting bonds. If the Federal Reserve is dropping interest rates, get in front of the Federal Reserve by buying bonds. I mean, that really is the name of the game. When the Federal Reserve is stable with interest rates or, dropping them, it's time to start buying. If the Federal Reserve is raising rates, then it's time to start selling, essentially. So here we are. This is the latest move here. This is about 4.5% down move. Let's see, between the recent peak, 4.62% down move between the peak on the 16th and yesterday's close. And that's after, I think it was a 19% run to that peak. Yeah, 19.21% run to that peak right there. Things like this only happen in bear markets. Big moves up like this, in a quiet, stable, normal, we call it normal market. The gyrations are, on a weekly basis, you might get a 0.5%, movement. Here we are. This is, I think this represents about 8 weeks right here, and this is a 19% move. That's a good year. That's, if you bought in January and sold in December, suppose you bought in January of 2022 and then you sold in December of 2022, you got 19% return. You had one hell of a year, Well, here we are, let's see where we are from the peak to today. From 2022's peak in January to today, it's down 14%. So it's out of bearish territory. If things happen the way they're forecast to happen by Hedgeye, then this is headed down to 40%, a negative 40% year. We'll see. We'll see what happens. The Federal Reserve wants to normalize to between 3.5% and 4%, which is another 1.25%. Let's see what the Federal Reserve rate today is. 2.25 to 2.5%. And so if it wants to go, suppose it wants to go to between 3.5 to 4%. And so that's another, point to point and a half, somewhere in that neighborhood, 1.5% more tightening. I think, I think the market's going to be kind of okay, really. I mean, I think that once rates get back to that percentage, it's going to be all right. The consumer is slowing down a little bit, but it's not terrible. A soft landing is what the Federal Reserve wants to do, and so what that means is that as the Federal Reserve raises rates, it's going to dampen inflation. So the idea is to get inflation to come down. It's going to dampen the economy. It's going to dampen GDP. Eventually, it's going to affect the rate of inflation to the point where inflation rates come down to meet the Federal Reserve rate. Or maybe at some point the 10-year or the 30-year, which actually are still really quite steeply inverted here. For the time being, I think the best trades. The trend is down. Yeah, the market's in a downtrend, and the best direction to trade in for the time being is going to be in the bearish direction. It looks to me like we're probably going to have a few days of consolidation in this area right here. Here we have a few days, about 7 days of consolidation here. It's a week or 8 days of consolidation. And here we have a few days. This isn't consolidation. This is definitely very volatile, but it's right in that price range area. The support was in the price range area, and it broke down below the support, came up, tried to get close to retesting it, couldn't make it, retested it, and failed again. So here we broke above this. For the most part, we broke above this sort of volatile area right here for about a day or so, and now it's selling off again. I'd expect, to see a prolonged downturn from this point forward. Until things turn around, I guess until the Fed is done with its rate hikes, until the inflation CPI comes down to maybe somewhere around 4%, sub 4%, then the market's gonna kind of be like, okay, well, the Fed is hawkish and we got to front run the Fed. That is the name of the game, by the way. The Federal Reserve really does represent a centrally planned economy in a lot of ways. The money printing, the money supply, so on and so forth. The Federal Reserve really does hold a lot of influence over what happens on the markets and in the economy. And so front running the Fed really is the name of the game. So for the time being, it's bearish as the Fed is hawkish. All right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session.